Cardano's ADA has had a little bit of a slip to the downside over the past couple of days ago. So since basically Tuesday, 1900 hours, we have an 6.69% move to the downside, right? And it's still continuing to drop back down towards its 200 exponential moving average. This is something very much that we've been talking about and is in line with our expectations. There's still the possibility for a little bit more of a deeper move. So I'm going to give you the worst case and best case scenarios here. So as we kind of measure our distances from this previous swing high to the swing low over here, move the fibs over to our previous swing high here on the 13th. You can see the potential here is for 73.2 to 75.2 cents. Okay, and I'm going to put a little yellow box area just to mark that up so you guys can see. The good news would be that if we can find support on the 200 exponential moving average, we can then start a move to the upside. Now, taking a look at our structure, I would say that there's a possibility that it does do this, but it is a little bit deeper than we would normally expect at this point. So I guess if we actually zoom in on this, we could potentially see 77.73 to 78.69. And again, I'm going to draw that up here as well with another yellow box area, just so you guys can see what I'm looking at. Okay, so minimum expectations have been met so far. We can still see a potential move a little bit lower into this support range, and there's still that wild card down here as well between 73.2 and 75.2. Okay, so let me go ahead and draw the waves on so you guys can see. On the smaller time frame stuff, we kind of have the kind of three waves like this, looking for support on the 200 exponential moving average. And then on the larger kind of macro, or say macro piece, but on a slightly zoomed out view, you have this one here. Okay, these are the bearish situations that we find ourselves in at the minute. Either way, I'm looking at this 200 EMA as the potential for great support. So the idea would be that we kind of go into a long here. We put the stop loss lower than this kind of expected range. Now, our kind of resistance is going to be that 50 EMA, 50 SMA. And in this particular case, we will be looking for a 1.5 risk reward ratio. So I'd do something like this. Okay, entry around 78.66, stop loss down here at the kind of 77.44. And then take profit at 80.51. Okay, something like that would probably be a reasonable kind of trade in my mind. Okay, now taking a look at our momentum oscillators, we can see that we are oversold on the 4-hour and 8-hour timeframes, and we are still looking for progression to the upside, but we are in bearish territory at the moment. So expect us to kind of bounce around. Maybe there's a better entry around the 200 EMA. Before we kind of move out towards the 50 EMA, 50 SMA. This trade idea, I think, is where my mind is currently at, and something that I think is likely to kind of stick. If we take a look at the relative strength index, we're in bearish territory on the 1-hour time frame. Again, we see more slippage here, lower lows, lower highs, overlapping candlesticks. It's a short-term move. And I do think we are likely to see a bit of a progression to the upside in the coming couple of days or so. MACD histogram is showing weakness, so bullish divergence here. Okay, so basically what we've got going on are lower lows, okay, but higher lows on the MACD histogram. This is an indication that we're actually going to be looking for progression to the upside. This is a bullish place to be. So 200 EMA holding as support, looking for 50 EMA, 50 SMA, maybe even further beyond. So we can, of course, do trailing stops or just keep lifting up our stop loss if we need to. But we're going to think about that kind of 50 EMA, 50 SMA to start with. The bullish divergence helps confirm that kind of narrative that the 200 exponential moving average is more than likely going to hold as support, but we can't rule out that wild card down here just yet. Okay, so on our 1-hour time frame, this is actually pretty reasonable, right? We've had a great move to the upside. This is pretty much a corrective move that we see. We are looking for 92 cents to kind of get ourselves into a bigger impulsive run. And when we say that, we mean about trend-based structures from an Elliott wave perspective, right? 5-wave moves are considered impulsive because they are trending in one direction, FOMO, all the kind of emotional stuff that goes with it, which of course is what Elliott wave does. It tracks people's emotions, which is why it's so powerful. So as we kind of reflect on this, we had 3 waves over here to the downside, here, here, and here. We then have a 3-wave move to the upside, here, here, and here. And while now we have completed 3 waves to the downside, we could potentially be looking for a 3-wave move to the upside, only to then be met by an additional 3-wave move to the downside, which then actually brings us right in line with our expectations of this slightly lower move. It just might happen a little bit later down the line. So we can't rule it out. Okay, and we should be expecting some volatility when it comes to ADA's price action on the smaller time frames. Okay, so let's go ahead and roll this up into a daily time frame then, and we'll reflect on the most recent price action here. So with this most recent move to the upside, it's a very interesting structure. Let's go ahead and show you what I can see here. So we have straight off the bat here a kind of 3-wave movement to the upside coming into here. We then move this over to our most recent kind of low on the 6th of May, and you can see that progression is still looking for 1-to-1 to 1.236 on these fib scales, out between 93.86 and $1.02. Okay, so this here is going to be our kind of like, you know, expectations when it comes to ADA's price action. Of course, to do that, we are going to need to see, you know, this correction finish, which could also come down towards its kind of 50 EMA on the daily time frame, or even the 200 daily EMA. Okay, they are kind of sat down at around 71 cents. Okay, so if we do were to come down a little bit deeper, it wouldn't be the end of the world. Okay, so as you can kind of see on the daily time frame, we had the 3-wave pattern to the upside here. Okay, we could be looking for a 3-wave pattern to the upside over here, but we first have to come down towards that kind of 70-cent level and then push back up here. This would then get marked up as a much larger kind of W, X, and Y, also known as a double zigzag pattern, a zigzag pattern being an ABC, which it contains 535 patterns overall, if you're familiar with Elliott wave, that is. If not, you can check out the free Discord that's linked in the description down below, and you can grab yourself a 50% off coupon and head on over to 𝗕𝗘𝗪𝗏𝗏𝗏𝗏, where I put together a whole course on Elliott wave. Really, really powerful stuff if you understand it. It helps you kind of predict out what the future is doing based on people's behaviors. So 93 cents to $1.02. That is kind of what we'll be looking at here for that particular pattern. But it's very corrective, right? And that's kind of the story of ADA, right? And when we say corrective, we mean short-term movements. Here would still be marking a lower high on this kind of structure, but we are looking for here is going to be diagonal based patterns, right? Based on everything else that we've been seeing and exploring within the price action. Now, from our oscillators and from the MACD histogram here, you can see, you know, not a lot has really changed from yesterday. It is still kind of, you know, in this kind of area where there's not a huge amount of appetite for buying or for selling. Turn that off, bring in the stochastic RSI. It's correcting down. I expect us to correct down, although bounce around a little bit on that journey. So I am going to be looking for us to kind of test out that kind of 200 daily EMA after its breakout, looking to confirm it as support, and then looking for that kind of breakout towards the $1 level. Our relative strength index is coming down. It's still in bullish territory, so momentum is just kind of shifting around a little bit, but it's not bearish in any way, shape, or form, in my opinion. We can, of course, see about whether or not we have ourselves kind of trend lines going in here if we wanted to. Let me just go ahead and draw that on so you guys can kind of see visually what that might look like. Something to this effect, right? So we can come down, bounce from it, and then take us up to overbought. That would line up with that kind of $1 breakout situation that I think is likely to happen there. And of course, from the accumulation distribution, still sat very high. So if we zoom out of this, you can see where it was during kind of 2024, where it was in 2023, and where it was in 2022, right? We are significantly higher. It means a lot of accumulation is still underway. And it is not, the price action is not a reflection of that kind of stuff. It's just a reflection of the fact that the retail investors are impatient and they don't fully understand exactly what is going on here. Once you kind of get more clarity when it comes to the global economics, and of course, you get the Fed policy, aligning with, quantitative easing and things like that, we are likely to see a bigger surge and more confidence coming into the markets. Okay, this is not ADA specific, but you kind of get the idea. And we are going to be looking for new all-time highs, in my opinion. If I zoom out of this far enough, you guys can take stock of the bigger macro picture, which is obviously looking for $3 to $5, I think it is. Yeah, $3 to $4.77. And then on the kind of more kind of medium kind of term, I am thinking $5.27 to $12.91. And of course, insane bullish kind of moonshot at around $38. Yes, I'm aware of what the market cap would be on that particular scenario. Of course, market cap doesn't matter because market cap doesn't represent anything other than macro level pricing, which means pricing dictates market cap, and therefore market cap cannot be a limiter to price action, right? Otherwise you end up in a circular calculation, right? If market cap were to be a barrier to price discovery, but price discovery is what drives market cap, it's a circular calculation. It would just be mental, right? Understand that market cap, the way that it is calculated, is showing you obviously the price multiplied by the circulating coins, right? It does not show you the liquidity. It does not show you capital inflows. It shows you a theoretical fully diluted market cap price, a macro price, right? It doesn't represent value, doesn't represent liquidity, doesn't represent inflows, right? And so you start breaking that calculation down. What does it actually show you? It shows you a price at macro level. Okay, so what does price, or how do you drive price then? Well, price is driven from supply and demand. And then you start thinking, okay, well, how do you drive demand and how do you shrink the supply? And that drives price higher, right? If you start thinking down those lines, you'll start to realize that market cap could be $500 trillion, and it represents very, very little actual dollars, right? I think most recently XRP's market cap has been 600 times higher than the inflows. Okay, so for $1 billion in inflows, you could see 600 billion on your market cap. Okay, so this is how you also saw a $6 billion market cap cryptocurrency drop down to $500 million or $500 million, or whatever it was, right? 500,000, I think. It was crazy. And it was driven not because there was a mass exit of, $5.5 billion or whatever. It all came down to the fact that market cap is very misleading, right? And it's all about supply and demand. So don't get tripped up thinking market cap is going to stop your price from reaching certain levels. It is not. It's more important to understand what's driving your price. That's supply and demand. It works on all markets, not just crypto markets, right? And if you can understand that, then you can understand and see kind of calculations wise, where price is likely to go. As that example, right? XRP saw, I think it was inflows of a couple of $100 million, and the market cap absolutely exploded accordingly, right? Understanding that there's a significant difference there is important in this space. So I am looking for some conservative numbers though. I don't see us being able to drive the capital high enough to really push out beyond kind of $5.27 and $12.91 based on obviously the amount of supply that there is. But I would love to be wrong about that, right? And we do have that wild card of $38. But as I see here, I'm looking for new all-time highs, barely. If you kind of reflect on where it has been at $3.10, out towards kind of 5 to 12, I think is the most realistic. You can let me know your thoughts down in the comments, or better still, join us in the free Discord that's linked in the description down below, guys. I'm going to leave it there. If you found it useful and informative, smash the like button, subscribe if you're new, and I'll catch you in the next one.